Hello, and welcome to today's NinjaTrader Ecosystem event, Psychological Tips for Passing a Funded Account Challenge. My name is Chris, and I'm a platform representative at NinjaTrader. Before we start the webinar, I have a few housekeeping notes. This webinar is presented by NinjaTrader LLC, which is the technology company responsible for developing and supporting the NinjaTrader trading software. Brokerage-related questions should be directed to NinjaTrader Brokerage using the phone number or email on the screen. And lastly, if you are new to NinjaTrader, please make sure you sign up for a free NinjaTrader account, which includes access to 14 days of complimentary real-time market data. Our platform is always free for advanced charting, strategy backtesting, and trade simulation. You can create your free account by following the link on the screen, then clicking Get Started under the Welcome section. And before I turn the mic over to James, it is important to understand that futures, foreign currency, and options trading contain substantial risk and is not suitable for every investor. It is possible to lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. Also, please remember that these training sessions are not a solicitation nor a recommendation, but simply educational in nature. Thanks again for joining us today. Without further ado, it is my pleasure to welcome to the NinjaTrader webinar room, James.
Right, thanks, Chris, and thank you, NinjaTrader, for this opportunity to showcase TradeDay, or at least introduce those that have never heard of us, introduce us to those that have never heard of us. And you know, like, one of my favorite things to do is to talk to traders about trading. So, you know, this is a real treat for me. But for those of you who don't know TradeDay, we are part of the I guess what's being called a trader evaluation services industry, or sometimes online prop trading industry. I've even heard things like sim to funded industry. I'm not quite sure what the correct designation is, but essentially what we do is for those traders that are looking to get their trading funded, perhaps they don't want to put their own capital at risk, or they feel they're undercapitalized, and in some jurisdictions it might be difficult for them to get access to futures markets. They come to us and prove that they have the ability or the potential, let's say, to make money by going through our evaluation. And if they pass our evaluation, what we do is we open a funded trading account for them. Now, we got going in 2021, November 2021, so just over a year and sort of 3 months, year and 4 months, started funding our first traders in February 22. So we've got about a year's worth of data. And what I wanted to do today was really sort of share some of the insights that have happened for me over the year that we've been funding traders, and the sort of 13 months that people have been on our platform, to see if I can sort of impart some insight into, you know, what approaches work and what approaches don't. For those of you who don't know me, you know, I've done a few interviews around the web, but you know, I'll just sort of briefly recap. So my name's James Thorpe. I am the CEO and co-founder of TradeDay. I've been in the futures trading industry for about 32 years now. So I started in 1990, so just over 32 years, going on 30, well, it'll be 33 years soon. And I guess, like, the most interesting part of my experience, I've had a few roles, but the most interesting part of my experience that you're probably interested in as an audience, one, my 15 years full-time trading. So I traded full-time for 15 years, started as a floor trader and made the transition to off-floor, on-screen trader, as we called it back then when the floors closed in Europe, and traded for 9 years on screens full-time, various institutions, but predominantly being backed, being funded. So I made my first trade in 1994, and I was one of the first people that a gentleman called Gidon Hirschton funded as a trader. Gidon went on to sort of build and own GH Financials, which is a global clearinghouse now, and Mercury Derivatives, which is a huge, one of the world's largest data trading prop groups. And so I traded for 15 years, and I've also managed professional trading groups for around 10 years. Now, professional trading groups are like more on the institutional side, or where we hire talent and pay them a salary, sometimes as a percentage split, sometimes as kind of like a eat what you kill kind of structure. But it's I think professional is a little bit of an unfortunate designation, because I know plenty of day traders, retail day traders at home, that this is their profession, right? This is what they do to make money. But so I guess you could sort of delineate it with institution. So I've been on the institutional side most of my career. And then in 2019, 2020, as COVID rolled in, I found myself without a role, and I was looking around opportunities. It seemed to me that more people were interested in looking for toilet roll than hiring a new person at the time. So I decided I would start my own company, and I wanted to try and marry up my experience of being a trader and managing traders, growing traders and developing them with what I saw were the emerging trends at the time, which were more people at home, more people with time on their hands, and more people looking for opportunity. And that's when I kind of came across this sort of sim to funded space. There were some incumbents in the space at the time, and I was having a look at what they were doing, and I thought, if I could do something very similar, I could do something better, if not better, at least different. And what I wanted to do was, pull in my experience, my contacts from the professional trading world, and try and deliver that to the trader at home. In this evaluation, let me just actually pull up the chat in case anybody has any questions. If anybody has any questions, please feel free to throw them into the chat. I think I've got a question from James. Can I increase the audio? I'm just going to turn it up a little bit. Let me know, Chris, if that's too much. What I wanted to do really was, as I said at the start, was just have a look at some of the I guess some of the insights that I've gained, because managing traders remotely through TradeDay as a vehicle is very different to managing traders in a professional trading group, where it's much more hands-on. So there's one like a passive management with the remote aspect of TradeDay versus an active management, and some of the challenges that we've faced. And as a result, some of the approaches I see traders take, and some of the mistakes that they're making. And I hope, that at the end of the presentation, there'll be some insight there for you that might help you. Certainly those that are considering joining a company like ours in order to get evaluated and get funded. Okay, so the first thing I want to sort of mention is know the rules of the game. Okay, so the evaluation process is a method for us, as I said, to try and establish whether you have the potential to make money, whether we want to place a bet on you, our risk on you. And the evaluation, the test, if you like, is kind of designed to replicate successful trading, right? So in order to pass, you're going to need to have a proven trading strategy or a profitable trading strategy, risk management and discipline. And if you're a novice to trading, you're going to find it very difficult. Just like you would find trading very difficult, you're going to find passing the evaluation very difficult. So I don't recommend, occasionally we'll have people approach us, say, hey, I know nothing about trading. Can you help? And, I always say, well, look, come on to our 14-day free trial. We have a lot of free courses on there to introduce you to futures and introduce you to the basic concepts of trading. So what we call like the 4 pillars: technical analysis, fundamental analysis, risk management, and trader and market psychology. We have some free, quite a bit of free content that we've created around that. But if you're not ready to be evaluated, don't take out an evaluation. If you're not confident in your ability to meet our profit targets in what we would call a risk-adjusted way, or producing risk-adjusted returns, then you're going to find the evaluation difficult and you're going to be wasting your money. So, don't play if you don't have a strategy. And the other thing is to know TradeDay's rules. So we get a lot of traders coming from other proprietary trading groups, other sim-to-funded groups. And, I think the philosophy amongst most of the players is very similar in how we design our evaluation services. But there are nuances around the evaluation. And, occasionally we'll have people come on, they'll break a rule, they'll lose the evaluation account, and then they'll write a ticket to us at support saying, why did this happen? It didn't happen at my old firm. Right. So if you're going to come and join us, just take a breather, take a moment to go through our FAQs. Everything's laid out there. There's always somebody manning support at TradeDay.com. You can always come and ask us questions if anything's not clear enough, but know our rules and make sure that you have a strategy that you think is going to work for you. And then finally, the other thing to remember before you join is ask yourself, will your strategy work within the restrictions of the evaluation? Right, so TradeDay is very much a day trading platform. And if your strategy, for example, is a swing trading platform or a buy and hold or a long-term sort of more investment, that's not going to work with us. That's not going to work on our platform. We're very much focused on day trading. We do this to mitigate our risk and the financing costs of trading, which elevate exponentially when positions are held, when markets are closed. Somebody asked me, what does that mean? Basically, if you have a position open on Friday, the market closes over the weekend, that position can open significantly against you on Monday if there's some breaking news over the weekend. And, where you thought that you were going to get out of that position, it could be blow through or gap open through that sort of stop that you had in mind, and it could cause uncontrollable losses. And obviously that'll be our losses because it's our capital you're trading. So, for that reason, we focus very much on day trading. I was a day trader for 15 years. Steve was a day trader, my co-founder. That's what we know. That's what we teach. So just make sure that your strategy works within our restrictions, our daily stops and things like that. The other thing is right before you set up is to understand that technology is not be perfect and be prepared. What's your setup like at home? Right, there's been a few instances lately where we've had technology failures, not us, but the platform that we use has gone down. And you need to be prepared for that. Now, what you have to understand is technology is not perfect. It's part of the risk of trading. And I can tell you, in 2000, when I made that transition from floor trader to screen trader, I was one of the first wave of traders trading the new electronic exchanges. And, we would have outages every day, if not every day, at least once a week, 2-3 times a week. Something would go down either at the broker level, the clearinghouse level, or at the exchange. And, it was an absolute nightmare. But thankfully, 23 years later, things are a lot more stable. But nevertheless, there can be issues. When we build a trading group, and I've built trading groups all around the world, the one thing that you start with is, can you mitigate the risk or mitigate this risk and make the platform or make the trading room, whatever it might be, the infrastructure as stable as possible. And when we started TradeDay, we looked around and we decided that our partner would be TradeAvate because they were riding the CQG data feed, and and that was offering the most stable experience. When NinjaTrader bought TradeAvate last year, we were absolutely thrilled because not only could we now offer a very stable experience, but we could also bring in the wonderful trading community and all the community resources and open ourselves up to all the audience of NinjaTrader. So it's been a really great marriage. I think obviously for Ninja and TradeAvate, but also for the trading community as a whole. Now we are probably, I think we're the only one, and we were certainly the first company to be able to offer the NinjaTrader TradeAvate integration, which means that you can trade on NinjaTrader, and which is, as we know, a downloadable application, Windows desktop application, and get out of that position on your phone through TradeAvate. So it's been great. There have been some teething problems, as with all data releases, but it's getting better and better every day. And we're proud to sort of say I think we might be the only one that's offering this integration at the moment. But going back to this slide, technology is not perfect. The best thing I can always recommend is be defensive in your order entry and order management. So every time you enter a position, make sure you're entering a protective stop at the same time. In case your internet connection goes down, in case something happens, there is a stop in the market that's protecting your P&L. And this is just not advice for evaluation services. This is just general advice for trading. But we do have traders that will fail the evaluation because they have a technology issue, they had an open position and they can't get out of it in time, and it triggers their daily stop. And it's like, did you have a protective stop in when you opened that position? No. Well, that's not the kind of trader we're looking to back, right? Because when you get funded, we're going to put our money in a trading account for you to trade. And we want to know that your technology set up at home is to an extent the best it can possibly be. So are you using a decent home internet connection? You're going to be trading hundreds and then thousands of dollars. You want to know that your internet connection is stable. Is it worth upgrading your home plan? It's going to cost you, a few dollars a month to upgrade your home plan. Do you have a backup? I always, if I'm trading from home, I make sure my phone's nearby. So if I lose my home internet connection, I can jump on my cell service and trade out of that position through the TradeDay app. Are you using a browser or desktop application? Over the year, we've heard anecdotal evidence to suggest that those that download the desktop applications have a slightly more stable experience than browsers. A lot depends on how many browser windows you have open, the RAM on your computer, etc. Just make sure you're operating, sort of at the most efficient that you can. And also know when there is increased possibility of instability and lags in the system. So we have a lot of traders that I noticed that like to jump into trading major news events. They're attracted to the, the huge spikes in volatility and the possibility of quick windfalls. We don't actually recommend it. And we're actually about to publish a long form piece on why trading tier 1 data is a bad idea. Nevertheless, we have a lot of traders do it. And this is the time we get our most complaints. Oh, the system's slow. Oh, I couldn't get my orders out. Oh, I got a bad fill. All these kind of things like that. They come in when they're trading in the seconds following a CPI data release. And what kind of, what's happening there is that trader and the rest of the world are trying to get in and out of the market. You're competing with high frequency, low latency trading machines that are co-located, firing on all cylinders, trying to get their orders in and out of the market in microseconds. And the huge amount of data that's going through the system, going from, it starts obviously at home for you on your home internet connection, home platform, into the broker's platform, and then all the brokers going into the clearinghouse and all the clearinghouse into the exchange and back again. There's huge amounts of data coming in and out of the system, cause delays, cause misprints, cause lags in the system, and I think you just have to be aware that these are not the times to trade when you're a retail trader from home. There are plenty of other reasons why you shouldn't trade data releases. I'll cover them on another presentation, but just for the sake of this slide on technology, that's what you're experiencing. Try and avoid trading these huge spikes in volatility. Now, I want to talk about some of the pitfalls that I've noticed retail traders and inexperienced traders, new traders, that they make, some of the pitfalls perhaps. And again, it's through the lens of evaluation services, but it's just as relevant if you're trading your own account here. Every trader is different, right? Every trader's approach is different, and what works for some won't work for others. And, I'm not here to sort of say this is specifically wrong, but what I'm trying to sort of say is just give you like a generalization, a general sense that watch out for these types of things. In terms of joining TradeDay, it's a monthly subscription. Now, it's a monthly subscription because we have monthly costs associated with you being on the platform, whether that's market data, whether that's the evaluation, a setup account fee that goes on, that's a recurring monthly fee, whether it's every time you buy a new evaluation, that fee. In the case of TradeDay, we pay for third-party research that we give to our traders for free. These are monthly ongoing fees. So we have to have a monthly subscription to help us cover the cost of running the business. If we just had an upfront one-off payment, then if a trader stuck around for too long, we could be losing money and covering costs indefinitely until they decide to leave us. So we have a monthly subscription. Makes sense to us. And it also keeps the initial price point down for the trader at home. The problem is the unintended consequence is that it puts traders under pressure. And you never, ever want to be under pressure as a trader. You never want to be put under pressure as a trader. But nevertheless, that monthly billing cycle, people start to see it and they think, I want to get funded in the first month. Now, one of our rules is trade for a minimum of 15 days. That actually might be changing soon, but At the moment, it's trade for a minimum of 15 days. There are probably 20 to 21 trading days, 22 trading days in a month when you take out weekends, right? If you've got trade for a minimum, that doesn't, trade for a minimum of 15 days, and you've only got 20, there's not a lot of time in a month to complete the challenge. But nevertheless, we see people go at the challenge really fast and really hard, trying to complete it in the shortest amount of time to avoid that second billing cycle. And all they end up doing is trading, looking for opportunities in the market that aren't there, or trying to force opportunities into the market that aren't there, or over leveraging the size of the account, which I'll come on to next, in order to sort of get some big trades and meet the profit target quickly. And all it does is it puts them in a position where they end up hitting the trailing maximum drawdown or hitting the daily stop and failing the evaluation. And what I want to sort of say to traders is this: you're coming to trade day with a trading strategy you want to get funded. That's because you believe you can make money. We want to fund you because we think you have the potential to make money. From there, we want to grow you and we want to scale you. We, unlike a lot of other firms, are actually funding you with real capital in the live markets. So when you're funded, we're now aligned, right? Every dollar that you make, we make a commission on, or we make a percentage on. So it's in our interest to grow you and make you into the best trader possible. So what I would say is this: try not to focus on the short-term cost. If you've got to go through 1 or 2 billing cycles in order to pass the evaluation, it's much better to do that than trying to sort of push it through in one, trying to sort of reach the target, end up failing, and having to buy a reset or leave the evaluation prematurely. The other thing we see is, it's along the same lines. It's over leveraging. Now, I think I see this anyway in traders generally. Like people, this is why people fail and they blow up. They over leverage the accounts. But we see traders come in, and one of the things they say is, oh, it's $1,000 daily stop. I'll just trade to, I'll get to $1,000 daily stop and then I'll stop. Well, then quite often they might hit it. But they're trading too big a position for that account. That stop's too restrictive, right? But when you think about it, the trading maximum drawdown on our advanced program is $3,000 and the daily stop's 1,000. That's 33% of the trading account, or what we'll allow you to lose. So if you're finding 33% of a trading account too restrictive, then you've got to say to yourself, wow, I'm massively over leveraging here. I need to trade much smaller position size, trade micros. Again, I'll come on to that in a moment, but you need to sort of wind back your, trying to overcome your own ambition, right? Your own a desire to seek profits quickly, because you're just going to put yourself in a difficult position where you're going to blow the account, right? So don't over leverage the account. Don't take on too big a position size. And I said, moving on from that, using the TradeDay daily stop as your sign to stop trading. And on our advanced account, our daily stop is $1,000. And what we see a lot of is traders will use that as a sign either to, they either hit it and blow out, or a point where they're going to stop on the day without any concept of what they're capable of making on a day. And I'm going to come on to, sort of like a good philosophical approach in a few slides, but it seems kind of bizarre to me. Like, if that stop wasn't there, they wouldn't have stopped trading, regardless of what they actually think that they can make on a day. The other thing to watch is the over trading and the impact of commission. And when you trade there's a big tendency for day traders to want to what we call scalp the market. They're taking very, very small profits, doing a lot of round trips, trying to capture very small profits and have very, very tight stops. And one of the things for a trader at home is they're sitting on a platform where the commission, the commission for the retail trader is high, and it can impact your P&L. And what it means is, if you're doing a lot of scalping, you have to have an extraordinarily high or impossibly high win rate in order to make money. Now, if you think about it this way, if I buy one E-mini and sell it 10 ticks higher, okay, what's the impact of commission on that P&L versus if I buy one E-mini and sell it for a tick higher 10 times? Right, it's the same amount of ticks. I've made the same amount of ticks, but I paid 10 lots of commission on the latter and 1 lot of commission on the first. Right, so you start to understand the impact of commission on trading. So watch over trading. We get traders who are quick to reset when they're down in the account. Okay, so they're giving up, right? This is another thing that I think is one of the reasons why we see a lot of people caught in this sort of like boom bust, where, you know, they might struggle through an evaluation, or they pass an evaluation, they get funded, they lose the account, they come back through the process. You know, it's kind of like they get stuck in this cycle rather than sort of making steady progress up. And I think one of the things that is that when they're going through an evaluation and they start to lose money, rather than fight to get it back and learn the skills that they need to learn to get it back, it's just easy for them to sort of hit the reset button and buy a reset and start again from zero and see if they can get the profit target. And we see this happen with some individuals, and it's a nightmare, because I know if they pass and they get funded, what's going to happen is they're going to start to lose money, and they don't know how to recover from trading losses. You know, and recovering from trading losses is a whole skill on its own. And hopefully one day NinjaTrader will invite me back, and we can go over, you know, how to sort of develop as a trader, and part of that will be recovering from losses. But the point of this is that, you know, if you're losing in an evaluation, you're not doing yourself any favor by hitting reset and starting again from zero. Learn the skills that are needed to recover from trading losses, because you're going to have trading losses when you're funded and when you're live, or when you're not even with TradeDay and you're opening your own trading account. You've got to learn to develop those skills. And then finally, one of the things I want to talk about is scalping the simulated algorithm. I'm just checking on time, and I realize I'm about four or five slides behind here. So I'm gonna just move ahead quite quickly. Scalping and the simulated algorithm. Now, on an evaluation, you put in a simulated market, and a simulated market is as close as possible as the software can replicate what it's like to trade live, but it's not perfect. And what can happen is the simulated software can grant fills more generously, and it can and grant stop prices more generously, not give it as much slippage. It's not designed to do that, but that's just the, you know, one of the foibles of the software. And what that means is, sometimes we see traders coming on scalping, and they're like, you know, well, they're working a bid, they're working an offer, and they're trying to scratch if they get filled and it starts to go offside, and they're just trying to take a tick, and they're making progress. But when they go live, that strategy falls apart, because it's harder to make those scratches, and it's harder to get those half ticks if they're passive in the order book and they're waiting for their limit orders to get filled, because the simulated fill algorithm was granting fills more generously than the live algorithm. So watch scalping. I'm going to move on quickly, and because, you know, as I said, I'm conscious of time, and just run through these, because these are almost like the opposite of what we just talked about. You know, when I see traders pass our evaluation, they're usually passing in the second or third billing cycle. All right. So, you know, as I said, unfortunately, the billing does put you under pressure. I understand that. There's nothing we can do to get around that. But I'm just trying to set expectations here, right? The ones that are passing are the ones that are taking their time. They're typically trading micros, right? I think Futures Fanatic, Rod Casilli, does a lot of work on this. And I know it's a lot of other YouTubers, education YouTubers are focusing on micros, and that's brilliant. You need to start trading micros, even in the larger accounts, just till you get your rhythm going. Then you can start scaling the micros gradually. But those that are passing usually are only trading micros, even in our bigger accounts. They typically avoid major data releases. You know, this could be because of a huge increase in volatility doesn't work for their trading strategy. It might be they understand the foibles of technology, and how, you know, that's the time they might be struggling to get proper fills, and there's going to be large amounts of slippage. So they usually wait for these big events to pass before they come back into the market. And they have very, very strong risk management skills. Now, We had a trader, funded a trader about 2 weeks ago, and I was looking at his performance report from the evaluation, and he had a 37% win rate. You know, that's 37 out of 100 trades were winners. So the majority of his trades were losers, but he was doing an excellent job of managing his stops and managing his losses, and on the flip side, running his profits, right? And we always find that, you know, risk management is a very much overlooked sector for traders and new traders. So work on that. I would advise working on risk management more than technical analysis. See a lot of new traders look for the answers in charts, and I've seen many careers wasted of people looking for the answers in charts and technical analysis. You're much better off focusing on and honing in your risk management skills and understanding the psychology of the markets and the psychology of yourself. I'm going to just blow through this slide really quickly, but because of time, but I just wanted to touch on one thing that we see when traders are funded. Now, you know, and this is obviously, if people are coming through our program and they're going to get funded, this is very useful. But even for you guys who are trading your own accounts or about to start trading your own accounts, one thing, in preparation for this, I looked through the last 20 accounts that we funded, and 80% of those lost money on the first day, right? Just because you pass the evaluation doesn't mean that you can make money trading live. You know, there is always what we call a sim to funded drop off in performance. And you're going to go through a very frustrating situation where you've tried hard to get funded, you've got funded, we open a live trading account for you, and you're thinking, right, I'm off to the races, I'm going to make a fortune, I'm going to be the best trader TradeDay has ever seen. And on day one, there's an 80% chance of you losing money. What you don't want to do is go in on day one trading 2 NASDAQs or 2 E-mini S&Ps and losing $500, $600, $700, $800, right? Because now you've blown like 25% of the account, and you know you're a few days away from blowing the entire account, and you're like, what the hell happened there? And you know, it just becomes a mess very, very, very quickly. What you want to do is understand that you've got a learning curve to go through. I was just coaching a trader, and the way I described it is a bit of a poor analogy, but I was like, it's like building muscle, right? You're not used to lifting heavy weights, which is what trading live money is like. You're used to, you know, you've got to start with small weights and start to build muscle, start to understand what it's like to trade live money and handle live money. There are many, many psychological reasons why it's difficult. I won't go into them here, but just know that there is an 80% chance you're going to lose money on your first day. And, you know, there's this learning curve to go through. So you want to make this learning curve as cheap as possible, right? Just trade 1 lot micro, 2 lot micro, set yourself $30, $40 losses, and just really on the day, and just really take your time. So when you hit that first losing day, it's like, well, you know, what happened there? I was expecting to make money, but, you know, at least I didn't lose too much, right? And just keep trading those 1 and 2 lot micros until you get, what you'll find is you'll continue to lose money. And then eventually at some point, hopefully that will bottom out, and you'll start to turn, as you start to understand the challenges of trading live money, start to make those changes to your trading strategy that you're going to need to change, and start to understand the psychology of handling live money. And then, you know, when you the other thing we see is as traders start to sort of turn this curve, they're very quick to scale because they're like, okay, I've done it, I've cracked it. And that also leads to a further drop off in performance, because, you know, scaling is a very gentle, it should be a very gentle, slow process. You go from trading 1 micro to 2 micros, 2 micros to 3 micros, not 1 micro to 1 mini. You know, that's like, you know, that's like 1,000% increase in your risk. You know, it just doesn't work that way. And then finally, you don't be in a hurry to withdraw profits from the account, right? I think the best way to sum this up is nobody's going to make $1 million a year day trading with $10,000 in their account, right? And I'll tell you a story. We had a trader we funded about a month ago. He came on. I thought he's very talented, you know, certainly from the early days. He traded for about, sort of, I would say about 15 days, somewhere between 13 and 15 days. had a losing day, a scratch day, but built up $9,000. I was like, wow, that's very aggressive trading, but clearly he's got some talent. And then he contacts us and says, can I withdraw $7,000? Right now, because we fund traders with actual money, we have no restrictions on withdrawals. You can take as much or as little as you want, as often as you want, right? Because the money's there, you've made it in the trading account. And, you know, we paid out that $7,000, but I remember thinking at the time that is a big mistake, because that trader's now assuming they're not going to have a losing day. And sure enough, the next day they had a losing day, and the day after that, a losing day. And now they're under pressure at about $800 in their account. And, you know, we're used to swinging around sort of $400, $500, $600 a day. And within day 4 of taking that withdrawal, they blew the account and they'd left us. You know, and it's very sad to see, because I knew that trader had talent, and that trader, you know, had he left that 9,000 in there and he hit his losing patch, because we all hit losing patches, you know, he would have probably had about sort of 6,000 in there, and that would have given him plenty of time to make the adjustments he needed and recover his trading and recover his strategy, get his count back up. You know, don't be in a hurry to withdraw profits. When you do withdraw profits, make sure it's a small proportion of your trading account. The more money in your trading account, the easier it is for you to trade, the more risk you can take. That's the only way to grow as a trader. And then I'm sorry, I mean, Chris is like, I'm sure he's sitting there thinking, hurry up, James. But this is like my last slide, Chris. So if you can just give me like 5 more minutes, because, you know, there's a couple of things here, there's overarching philosophies, excuse me, that really helped me as a trader. They're very simple, but I think very, very powerful. The first one is this: never lose more in a day than you can make in a day, right? So traders often struggle to understand where their daily stop should be. And what I say to them is, have a look through your trading performance and get a sense of what you can make in a good day. Now, I'm not talking your best day, which are always outlying days. I'm talking, you know, on average, you're making sort of like, on a good day, when you've had a good day trading, you know when you've had a good day trading, if that number, let's say, is 30 to 40 ticks, that's where your stop should be if it starts to go wrong, 30 to 40 ticks down. Because what happens is this: typically, a day trader's rhythm is something like this over the course of the week. They might have 3 winning days, a scratch day, which is a day where you either make money or lose money, and maybe a losing day. And if you're capable of making sort of 30, 40 ticks on a good day, and you come in Monday morning and you lose, let's say, 35 ticks, what's going through your mind Monday night? You're like, okay, well, you know, that sucks, but, you know, I can have a decent, fairly good day tomorrow. I'll get that back, and then I've got the rest of the week to make money. If, on the other hand, you lose 100 ticks, you're going to be mad with yourself. You're going to be angry. You're going to be frustrated at the market. You're going to want to go into this sort of revenge mode trading thought process, and you're going to be completely and utterly demotivated, because now you're thinking, I need at least 3 good trading days in a row to get flat on the week, maybe 4 with commissions, right? And so I'm going to work all week for nothing. Right. And that is what will push your mind into poor trading decision thought processes, right? You'll start taking excessive risk, excessive gambles, looking to try and get back this 100 ticks, which, you know, we all know, everyone on this conference knows will, you know, just spiral things out of control. Things will get a lot worse very, very quickly. But it's that mindset. You want to avoid putting your mindset into an area, either consciously or subconsciously. It's usually like a subconscious thing, right? Where you start making poor trading decisions, where you start trading different to how you know you can make money. And that happens when you've lost more than you can make, right? So Mentor shared this with me when I started trading. You know, as I grew as a trader and became bigger and tried scaling up my trading, it didn't always ring true. Sometimes you have to take more risks. Sometimes I would lose more than I could make in a day. But, you know, I was 2, 3, 4 years into my career at that point. I knew I could handle those. I had a lot of money in my trading account. You know, $250,000. I lose $10,000. I come in the next day, I got $240,000. It's not a big deal. You know, different if I had $20,000 and lost $10,000. Come in the next day, I've got 10,000 left. And, you know, one more bad day and I've blown the account, right? It goes back to building your trading account. But if when you first get started, try and stick to that philosophy, never lose more in a day than you can make in a day. And, touching on that sort of rhythm of a day trader, one thing that people have trouble with, or traders have trouble with, is handling losses in the day. And that's because they don't want to have a loss in a day. And what you have to start with is the thought process that losses are part of trading. There will be days that I lose. And if you lose in a day, it's fine. What you should be measuring your performance in as a day trader is, how did you do on the week, right? Did you net positive on the week? Did you, the day that you lost, was it in a controlled risk managed way where you cut yourself off of what you're capable of making? Did you have 3 winning days out of 5? All that's good stuff, right? And all that's good trading, and that goes into the trading confidence P&L that we're trying to build from within us. And finally, on this slide, focus on the process of good trading. Again, that's, just what I talked about there, right? Think about the process and think about your discipline and how you're approaching, rather than the outcome, which is the dollar amount. Because when you start focusing on the dollar amount, you won't want to cut losses because you don't want to crystallize the pain of the amount of money you've lost. You'll start getting angry, trying to think, I've got to make that money back. Don't think about it in terms of money. Think about it in the process of good trading. Think about it in ticks. That always helps. And a couple of books I recommend are by Steve Ward, is somebody that does some work with us, Bulletproof Trader and High Performance Trading. He does a lot of focus on the performance of focusing on the process of good trading, right? He does a lot of work around focusing on the process, how to strip out the outcome and not focusing on the outcome, and how that can sort of push you forward as a trader. Right, I'll run over. I think I've got about, so I'm supposed to have 15 minutes for Q&A. I haven't left much. I apologize. But I'm going to go through some of the questions now, see if there's anything in here I can answer. What's a good rule of thumb for withdrawals? It's a very good question. Actually, we're going to put a post on our website about this. 50% is not small. The way we do it at TradeDay is this. If you break one of our rules, we don't confiscate the funds. If we decide it's time to part ways for whatever reason, then you get paid out your account, because we really want you to grow your trading account. As I said, you will not make money as a trader. You will not sustain a long term without growing your trading account, and you will not be able to make big profits as a trader without growing your trading account. Some traders, have hard targets in their mind. For me, when I was growing my trading account, I didn't take my first withdrawal till it was 10,000 up, and then it was more of a reward, right? I just wanted to take 10%. So I took 10%, and then I said to myself, when I get to 15 or 20, I'll take 10% again. And that was kind of like how I grew my trading account. It's not as simple and as linear as that, because you have financial commitments at home. At the end of the year, you have a tax bill you have to settle and things like that. But I think you want to have withdrawals based on goals. Like one of the mistakes a trader that made early on with us was that he got funded, he made some money very quickly. It wasn't much at all. I think he made about $1,500. And he said, I want to take out sort of half, 750. And well, of course you can take out half. That's the way we run our business. But that's quite a lot. That's 50% of what you've made so far. And he said, yeah, I've been talking to some other traders and they tell me it's important to taste the money. And I'm like, well, those other traders are wrong. It's important to grow your trading account. He ended up taking a third, but it was, in my mind, it was still too much. And, within a week, he'd blown the whole lot and blown the trading account. It is personal. It depends on your personal situation. It's a good question, but I would do it goal-based, and I would do it so it doesn't impact your trading, doesn't impact the size that you trade, doesn't impact your trading decisions. Like I said, if I got my account, for example, if I got my account up to $20,000 and I took out, and doing that, I'm now risking $1,000 a day, right? So 5% of the trading account. And I decided to take $15,000 out, then, you know, I've got like 4 losing days before I've blown the account. It just doesn't make any sense. If I take $1,000 out, the next day when I come in, there's 19,000 in my account. And if I hit a couple of losing days, there's 17,000 in my account, right? It's not going to affect the way I trade, the way I approach the market. I've still got plenty of room to breathe. I can still trade my size, you know, whatever it might be. Do you understand? So it's really important to have to take out small amounts, but make them goal-based, like rewards. Like when I get my account to here, I'm going to take a small amount. I hope that makes sense. How many funded traders do you currently have? We don't publish those numbers, I'm afraid. I can tell you that we started in November 21. We started advertising. We had our first traders wander onto the platform in sort of mid to late December 21, and we funded our first ones in February 2022. You know, we don't publish those numbers. We are also relatively small compared to the incumbents in the space. So I think if we did, it wouldn't look that impressive. You know, but that's just how we operate. Please repeat the books I just mentioned. Okay, so Steve Ward, High Performance Trading, is his. He's written 4 books, but the 2 I really like are High Performance Trading and Bulletproof Trader. They are books that Steve is a performance coach who worked with the British Olympic team before getting into trading in the early 2000s. He traded himself for I think about 7 or 8 years before marrying up his performance coaching and psychology expertise and his trading, and now is in demand around the world, you know, working with banks and hedge funds and proprietary trading groups. When I was manager of Mercury Derivatives, we hired him to build trading programs for our managers and traders, and the feedback was always excellent. And those 2 books, you know, I think are fantastic trading books. They give you real solid things to work through, you know, chapter to chapter. Okay, try implementing this in your trading, try this with your journaling, try, you know, like just really good solid books. What's the percentage profit for the trader in the company? So we will give the trader the first $5,000 they make, and then 80% thereafter. That might be changing soon, but just keep an eye on our website. Does a funded trader become professional? How does that affect data feed pricing when they own their own accounts? Very, very good question. So one of the differences between, or perhaps the main difference between us and a lot of prop trading groups in the space, is that Steve and I, my co-founder, thought it was really important that we actually are funding people. We're putting people in an account and putting our money behind them, because that aligns the trader with us and that incentivizes us to grow that trader. The downside of funding somebody is that you're now considered a professional trader because you're now trading our money, and you're considered a professional trader by the exchange, which means you have to buy the market data feed, the professional market data feed, which I think is $122 a month. That's just a fact of life. We can't get around that. But what we do is we stop charging you the monthly subscription fee to TradeDay, but give you lifetime access for the time you remain a funded trader with us. And that gives you access to all our daily research, our morning meetings, excuse me, and our 24-hour market commentary and some of the other resources we have. How many traders in our program? This person's concerned about support. You know, right now we're set up. Actually, Steve and I do a lot of the support, just because at this stage in our development, we want to know what the pain point are for traders, what the you know, what we can do to improve and evolve our platform. So, you know, we have a couple of other people helping us on support, but every day, Steve and I make it a point to be on there. So you're likely to get us. You know, we pride ourselves on our customer support, and we turn around very, very quickly. Obviously, if you're emailing us on a Sunday morning, you know, we're probably with our families, but during market hours, Steve's also in the UK. So, you know, we're not, I don't want to say we're 24 hours, but you know, I get up around sort of 6 a.m., 5:30, 6 a.m. Chicago time, where I'm based, and you know, and Steve will and pick it up when I'm in bed. So, we try and make sure we turn around tickets and support queries, within sort of, we say sort of 12 hours, but it's usually within sort of 20 minutes, 30 minutes, if we can. It's just, we really, really want to sort of stay on top of that. Obviously, as we scale, that's going to present challenges for us. But right now, we're getting 5-star reviews on Trustpilot. Go and check them out. And a lot of people are sort of commenting on how good the support is. So I'm very proud of that. Where's the location of your firm? So you might be able to tell I'm English, but we are headquartered in Chicago. That's where I live. I married an American girl, and I've been here since 2016. Prior to this, I was managing and building trading groups in Africa, lived in China for 4 years. Before that, I was in London. Steve's in London. So we have an office in London and we have an office here. And but the company's headquartered and registered in Chicago. It's an Illinois LLC. How do we get in touch with you? Support at TradeDay.com, or you head over to our website, TradeDay.com. Check us out. Somebody's asked here a little bit about why is it so difficult to focus on trading one strategy and then find that emotions suck you in and making erratic and emotional driven trades. It's a very good question. It's very, very broad subject. You just don't have time to answer it here. I'd love to come back and talk more about that on our site. If you go and check us out on our 14-day free trial, we have a bunch of free courses, and I run one on the psychology of trading, and we delve deep into there on why it is so difficult to manage our emotions. And look, just one thing I will say on that is this. One of the things I hear a lot, which I think's not accurate, is that you need to eliminate all emotion from trading, right? And I get where that's coming from, but it's not true. And the reason why it's not true is because, if you are discretionary trading, you got to remember you're human, right? And what we do, we are subject to our emotions. So it's not about eliminating. You can't eliminate the emotion from trading. It's about emotional state management and what you can do better that will help you deal with those emotions when they rise. And we cover a lot of that in our free courses. So go and check them out. The prices we charge are on the website. Go check it out. Emotion is a killer. Mike says that. Absolutely right, Mike. It is a killer, but as I said, very hard to eliminate it from trading. You're human, right? Don't be hard on yourself. Just have coping mechanisms in place, and you'll be fine. And what platform do we use? I assume it's NinjaTrader. Yeah, so we started with TradeAvate, and we were with TradeAvate, and NinjaTrader bought TradeAvate last year, and so now we offer both of those. Are there any restrictions to trading your own accounts simultaneously? No, Guy, you can run your own accounts and accounts with us at the same time, providing you can handle it. It is very difficult to trade multiple accounts at any one time. We would prefer that you focus on our account solely. It's our money, we're putting it in there, and we want you to make money and not to get careless or reckless. So, but there are no restrictions in place. Paul, thanks, very useful presentation. Thank you, Paul. Glad you enjoyed it. Will you have any discounts soon? All right, okay, good question. I nearly forgot this last slide, guys. Okay, so yeah, if you go to TradeDay.com and enter Get Funded, it gives you 20% discount off the lifetime of the membership, right? The lifetime of the subscription. We didn't want to do a bigger discount for the first month only, and as I said, put you guys under pressure, the sort of pressure we were talking about at the start of the presentation. 20% off the lifetime of the monthly subscription. You can follow us on Twitter, Instagram, and Facebook at TradeDay Funding, and always hit us up at support@tradeday.com if you can't find the answers you're looking for from our website. I'm going to end the presentation there. I thank you all so much for joining us today. I hope you found it useful. And yeah, lobby NinjaTrader to invite us back, and I'll be happy to share some more insights from my professional trading career, some of the challenges that I faced, and the challenges that the traders that I've managed over the years have faced, and hopefully we can sort of build you up to being better, more sustainable, consistent, risk-adjusted return traders. Thanks very much.
Hey, thanks again, James, for taking the time to share with us today. If you enjoyed today's session, we hope you'll join us for future webinars. Follow us on social media for alerts about upcoming events and other NinjaTrader ecosystem news. We would also like to remind you that the information provided in this was that of TradeDay and not of NinjaTrader. All information was for educational purposes and should not be construed as trading advice. Enjoy the rest of your day, and we hope you see you in future webinars. Happy trading from all of us at NinjaTrader ecosystem.